Time now for the business news segment. And our business editor, Stephen Carroll, joins me. Hi, Stephen.
Hi, Rochelle.
We're going to start with the currency markets, and the pound is falling again today.
In just the past few minutes, we've seen the pound hit its lowest level against the dollar since 1985. It hit $1.27.7 after more comments from the British Prime Minister Theresa May on how business needed a timetable for Brexit. So the dollar now hitting a level lower than we had seen after the results of the EU referendum. The pound against the dollar hitting lowest level since 1985. Against the euro, the pound had hit a 3-year low on Monday after May announced that Brexit would take place by March 2019. A cheaper sterling has helped to cushion any negative effects of Brexit on the British economy. The Prime Minister is warning that leaving the EU won't be plain sailing.
Well, how have the stock markets reacted to that?
Well, a fall in sterling generally has been good news for businesses. I was just saying it's good news particularly for exporters, and that bounce continuing today. We're seeing the stock market in London opening up, the FTSE 100, in fact, at one point breaching the 7,000 points mark in trading. We've got Germany's stock market back in business today. The DAX in Frankfurt up ever so slightly after the open. We're watching shares in Deutsche Bank closely again today, of course, because the market's been closed yesterday meant that we weren't following their reactions. They had started down ever so slightly, but quickly turned into positive territory. So there's some small gains on Deutsche Bank shares, which of course have been pummeled in recent days over fears about the bank's financial health. Over in Asia, Shanghai markets are closed for a public holiday, but there was gains on the Nikkei in Tokyo. That's after the stronger dollar was helped by some economic news from the United States. That's good news for Japanese exporters. Small gains too on the Hang Seng in Hong Kong and on the Kospi in Seoul.
Well, here in France, the government is set to announce a rescue plan for a train factory that's threatened with closure.
The Alstom plant in Belfort in eastern France has become an election issue in the run-up to next year's presidential poll. François Hollande has pledged to keep the factory open and protect the 400 jobs there. The government will officially announce how it's going to do that later. We're told it will mean the state buying 16 new TGV high-speed trains to be built in Belfort for €500 million, even though there's not strictly a need for them. Unions say this is just a temporary fix.
This is a first step, but further steps are necessary by the board of Alstom. We have to see if Alstom's board also has the will to ensure the sustainability of the Belfort site.
Well, let's stay in France. Another company trying to save one of its factories. Workers at the Smart Car plant in Moselle in the east of the country have begun working longer hours without being paid for them. It was a deal voted for by workers last year in exchange for guaranteeing their jobs for the next 5 years. Fernand Van Tetz reports.
The workers at this Smart Car factory in France are clocking more hours without extra pay.
For the moment, this is the solution that was offered to us, and I need to have a job.
It's done. We signed an agreement. What should we do? We need to work.
The 800 workers voted last year to accept the terms, work 39 hours but be paid for 37. In return, Daimler guaranteed their jobs for 5 years. The deal was made possible by a law passed in 2013, which allowed companies to get around the 35-hour work week if the staff agree. Car makers have been among the sectors that have taken advantage of the changes. Peugeot, Citroën and Renault have all struck deals with their employees. Daimler's offer was approved by 56% of workers in a referendum, but the move has infuriated unions.
It is incomprehensible, this change to 39 hours while production is very low, and we're worried that we don't know whether in 2020 they'll continue to produce there.
97% of workers signed up to the deal, which should see them return to a 35-hour work week in 2020.
Finally, back to the UK, where the Department of Trade has gotten itself to a bit of a jam.
The department's Twitter account posted a message on Monday that got a lot of attention online. It says that France needs high-quality, innovative British jams and marmalades. And it links to a page on their website which tries to connect British businesses to new export markets. This, of course, as Britain gears up to leave the EU. New trade links will be very important, but a lot of people questioning the words being used and exactly what an innovative jam is. Others were concerned at why France would need British jam, given that France is the world's second biggest exporter of jam in the world. And also the French brand Bon Maman is one of the best sellers in the UK. So lots of people worrying about that as well. Also those worried that perhaps which market the British might target next. Will they be trying to sell the French Dijon mustard? So lots of fun online around that poor person that sent that tweet from the Department of Trade in the UK.
Okay, thanks very much for that, Stephen. Stephen Carroll there with the Business Roundup.